Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is October 15th, 2017, and this is my weekly trade review, where I look at a morning NASDAQ trade, 9:30 opening trade. I trade based on a 5-minute candle. The indicator that I like using is the pivots, although I'm using other pivots and showing using other indicators showing up on these charts also. Uh, green candle we trade up, red candle we trade down. Doji is a no trade, greater than 10 is a no trade. Very basic, very simple rules that I share here. That seems to work out, and it's something that I like. We've been recording, and I'll start sharing this out here, recorded to show you that trading can be simple. Trading can be not as stressful as it seems to be sometimes actually doing day trades if you just have some basic rules. Again, this is all for educational purposes only. Trading can be risky. Trading, you will lose money. You will lose money. You will lose money at trading. The thing is, get educated. So you keep those losses small, you keep those profits high, and overall you can be successful at trading. Again, you'll find this video out here at my YouTube page. Also, maybe on our Right Side Trading YouTube page, which I got to get a link to, where I start showing it. But let's go ahead and jump right into it, into the chart. See if I got my charts and all set up. Okay, I'm on the wrong day. Let's go to the correct day. Okay, this is like I said, this is for the week of oh no, not supposed to do. I show my other stuff first. Forgot. Let me bring that up. We can go over exactly. Like I said, this is my weekly trade review. Today is October 15th. It's for the week of October 2nd through October 6th. Visit us at rightsideTrading.com. You can email us at info@rightsideTrading.com. You can email me directly at solomon@rightsideTrading.com or call me. For the week, October 2nd, we was up for 5. I show why I say only 5. October 3rd was a doji, no trade, one of those rules. On the 4th was up again for 5. We'll take a look at those. And October 5th, it was greater than 10, a no trade. And then on October 6th, it was up for 10. Kind of made up for it all. Nice day there. Let's go now. Let's go take a look at the charts and see what everything looks like. Cool. All right, we should be looking at the chart. You can see the dotted lines are some of my areas where I was looking for the market to break out or break above. I usually put those lines on my chart. The green line is actually a pivot line here. So kind of give you an indicator. That's a support. That's a support line. My green line is going to be like an R1 or an S1. That's how I have them color coordinated. By putting my cursor on it, I can see the number actually where it's at. And based on what I see up here, I can know that's a support line. So we're under pivot, we're under support. So you're looking for this thing to go down. It's been going up and it did a nice pullback. So this could be a leg up, pullback, then back up. You know, the patterns that they make in the market. But based on our basic rules, all we look for is that first 5-minute candle. And what does it tell us? Boom. That first 5-minute candle was green. Now, you see the market had only came up to this point and we're below pivot. So again, you don't have much room on this particular trade here. So you're going to have to try to nail this trade, get into this trade right here at this point, at the close of this candle, maybe no higher than this. You better be already set to get into this trade. And getting 5 points out of this trade, it's not going to, it may not happen. You needed to get into this trade early to get up here, and you've been looking for a breakout. And these are the trades where you'll see me, as soon as I see these things go profitable, I move my stop up right away and tighten up my stop to make sure I don't let these trades turn into a loser when I know I don't have that much room for profit and I'm looking for a breakout. Breakout, fake out, I call it. You know, I'm not a big breakout fan of breakout trades, but let's see what happens. It did go right to our pivot. And then we got this big long candle, which I would have got stopped out, or I would have ended up getting out of this trade and went to my next best play. Is the way I actually trade that. and then you get this crap going on. Then it finally breaks out. So again, if right here, if you've been patient enough on this trade right here, it didn't never stop you out before you got your 10 points or more. You got your 10 points on this trade. So that's the way. That's what we see, and that's the way some of my other guys trade this thing. They know based on the studies that we did, it's highly unlikely going to break. And plus, what you're seeing in the chart, and based on the numbers that we did, they'll stay in this trade, add more to this trade, and then take this trade on out. That's the way they trade it, and that's the way a lot of times I trade it. You see some of my trades, but that ends up being a little longer than a 5-minute trade. There's a little quick trade. The little quick money was right here to there, and then your next trade was down here in this demand area. When it came back down here, you had a couple of candles come down in this area. You had time to get into this trade, a second time. And what day is that? That's the second. It's not the day that I actually traded. I traded a different day. I was trying to see. It looks a lot like the 9th. I think, let me bring up my calendar. Yeah, it looks a lot like this past Monday. You take a look at that, you'll see it looks a lot the same. It's just funny when you've been watching this stuff for so long, you see a lot of the same patterns, a lot of the same things in the market. Let's move on though. But that was up for 5. I only gave it 5 because I know how a lot of people trade. I know how myself trade based on what we're doing. You've been out of this. You didn't get stopped out. It's all important how you play your stops. But you would have easily got your 5 points out of this trade right here, 04 to 99. Let me take that off. So that's why I just only put 5 points on it. You actually holding this trade the way I trade it, the way a lot of people trade it, the way people are looking at this to trade it. You don't hold it. If you play by your rules, you hold it all the way because you give yourself that 4 or 5 points to stop you out of this trade, and you would have got your 10 points or 5 points or more in this trade with no problem. But let's move on now and go quicker. Next day. Looking at this, Doji, no trade, and this is why Dojis are no trade. The market ends up doing this crazy crap at the beginning of the market, and all it's going to do is whipsaw you out. You wait for your next best play off of a pivot, and then you take that trade. Or it was just close enough to the next pivot up, you end up taking that trade down. One of those two things. So let's move on to the next day. This is another up in 5. Again, we were looking at, let me just zoom. We were looking at these tops here. This market had dropped a little. I'm just showing a little drop here. But again, all morning long, it couldn't break these highs. This supply area is a big supply area. We're letting this market come up any high, and it ended up dropping. So now I'll zoom in on this. Excuse me. So that's why I couldn't. I was looking at this. Okay, 5 points is all I really want out of this trade, and you would have had a hard time actually even entering this trade here. If you got into this trade at all. And if you got in at 90 to 95, that's all you was going to get out of this trade. That's all I was going to get out of this trade based on the rules that I used to play this trade. So let's look at it. And then it ended up going back down, which is another one of those ones. Again, you started getting a squeeze over here also on this indicator. And it still didn't do that much of anything. That was the whole thing on this. And finally, the squeeze finally popped. And you got in. And then did you get your entry in down here based on this? While your squeeze was going on, and you made 50 cents to, you made up 50, you made up, so let's let it go. Let's go to the next one. One thing. This is a greater than 10 day. Let's look at the first 5-minute candle. This market had been going up. We had your entry was back here at your crossover, going sideways. Late entry here. When you got a little bit of a pullback, but this trade went up. Could have got another entry going long here. And this market started doing a pullback, and these lines closer. If you want to take that trade long, this is at your opening. Now this is what you're seeing over here on that, and you would have caught this pop, on this trade. In the future market, you can trade this stuff early. In this market here, again, looking at option prices, I use options when I'm trading QQQ. They're usually a little inflated. The spreads are usually a little wide. So you have to be very careful about selecting what option and what options you're actually trading. You try to catch stuff like that. You know, the next best play again based on my lines here. Definitely looking at it. Okay, you came back down here, you came back down here again. So now why don't you take that trade? Why didn't you take that trade there if you did take that trade? Why didn't you take that trade on that double bottom? You know, this we see this. Once you really start watching the market, you see this a lot. Your stop is just below all this stuff if you go into the upside, and your stochastics and stuff was all down here at the bottom. Did it give you a diversion? It gave you a divergence on this first time when you saw it here, based on from this bottom to that bottom. So again, that would have been your entry on this candle here, or this candle here. That's what it should have been. That's your entry of this trade. You know, you would have dropped down a little bit here, but at 50 cents, if you got in on this trade early, uh, you're looking at 15 cents. You're looking at less than 20 cents. So you're looking at less than 10 cents on that trade that went against you. Based on my 0.5 delta that I like playing. But then once it did start turning around, this trade got profitable and stayed profitable for you for up until your 12:30, 1 o'clock time. So that was a good trade. Next day, last day. Friday was although that ended up being let's go back to that right quick. That was a no trade day. Go back. Click on the wrong thing. And I don't know if I showed you that. This is a no trade day though. Low. If you look at the low of that, that was 20.75. High of that was 37.75. That was a no trade day. So you stay away from those anyway. But and based on the rules, stay away. Go to the next day. Now let's go to the next. Look at the Friday. Boom! This market had dropped hard, pushed back. You get to see it over here. I can kind of give you a preview. Doing things a little bit different. And then that next 5-minute candle, right here. This candle here was just another one of those ones on Friday when it's just under that 10 points. That low was 40.5, 40 and a half. You need to go to 50 and a half. It didn't quite make it for your 10, so you should have been playing this thing up. Looking to get into this thing right here as soon as you can, you don't mind getting in it when you down at 44 and your supply area is way up here, almost at 64, at 60. You take that trade. That trade is going to take you. When it drops fast, it rises fast. It's not too much resistance here for this thing to go back up to this level here before you have to get out of this trade. So you end up taking that trade there based on that, just based on what you're seeing here in the market. If it goes against you, you want to be out of it on these lows again, and you're at 44 and 38. So it's 266 points, to get you out of this trade. You got to be able to take some small losses sometimes. But let's take a look at it. You never came close to you getting the loss before if you got into this trade, say even at 46, it went all the way up to 61. So that's over 15. That's what 15. 25 points on this trade, almost a crazy number. Based on points. I hear people talking about they trying to get so many ticks on that trade. We talk about how many points we're going to get on our trade, not ticks. But again, we don't trade. We trade small. We trade one contract, two contracts. Every now and then we get 5 contracts in the market. That's a lot of contracts in the market for us. But we trade small. On me, on one contract. If I don't even trade again. I don't even trade the future contract in the future anymore because one contract, two contracts, it start taking up a lot of money. Although I still throw a lot of money, I feel just more comfortable trading the options and watching options and trading those over here. It's a lot easier for me. But let's switch back and take a look at the overall week. That was the week. October 2nd was up for 5. We had a total no trade on Tuesday. Had an up for 5 on Wednesday. A no trade greater than 10 on Thursday. And an up for 10. So it really wasn't a bad week that week. And that's the way, in me with my options, I'm looking for the sweet trade. sweet trade really was this Friday trade. When you see it drop fast and turn around like that, that's your sweet trade, and that's the trade that I ended up taking today. So I usually like Friday, Mondays on my trade days. Uh, so that's pretty much it. This is Solomon and my weekly trade review for the week of October 2nd through October 6th. Again, contact us at Right Side Trading. You can contact me. You can email us at info@rightsideTrading, or you can email me directly at solomon@rightsideTrading.com. Check out our website. I can switch over to that. If you'd like to learn more about what we do and how we do it, check us out. We have other webinars and things going on, and I'm going to be coming up. We're trying to work on me a presentation where I'm going to start trying to do some webinars and stuff. And we're going to do not just day trading, though. I'll show you some of the other swing trading stuff that we do. And some of I'll show some of, we're going to do some intraday stuff. Normally, I'm trading Monday through Friday. I like taking my trades off on Friday. Sometimes I might leave something, put something on Friday and carry it over the weekend based on what I'm seeing in the market. But very seldom. And this past Friday was one of those Fridays where I did put something on and carried it over the weekend. And maybe in my next video, I'll show you a little bit about that. But otherwise, again, thank you for viewing. Check out my YouTube page. This is where this video will be posted. Subscribe. Need more subscribers. Need more views. But again, thank you for viewing. I hope you guys are making money out there. Although this is all for educational purposes only, but I hope it gives you a different look at the market and see what's going on out there. Practice. Contact us. I'm always looking to talk to other traders, but don't be. The thing is, only in the morning, before 11, and then I may or may not take a call if I'm actually into a trade. People that I do talk with, they know I get silent when I get into my trades. Again, I'm focused on what I'm doing, trying to make that little bit of money. But it's not every day. Catch me on one of those days when I'm not trading. I'd be more than happy to talk to you. Again, thank you for viewing. Have a great week trading. Talk to you later. Bye.